Indians are not buying gold jewelry. Gems and jewelry imports dipped 17% to $1.4 billion in July of 2024. Gold's demand hit a 4-year low in 2023.
Gold is losing its sheen. Gold prices are trading at their lowest level.
The jewelry stocks, and they've been a buzz.
And jewelry space, a jewelry company.
Hello Provestors, welcome to our channel where we dive deep into the exciting world of listed companies, trends and smart investing, and today we have something shiny lined up. For this video to make more sense, the first thing we need to do is take a bird's eye view of how the jewelry industry in India has evolved of late. We'll cover the jewelry market in India in detail and also cover a company which has quite an unusual story and may change this industry in the years to come. The origin of jewelry in India stretches through centuries. It's more than 5,000 years old, probably touching the mythological era of Ramayana and Mahabharata. You must remember seeing the images of characters wearing heavy jewelry from B.R. Chopra's Mahabharata. Needless to say, so much has changed in these 5,000 years. Even in recent times, we have seen significant changes in the way we buy and use jewelry. People have moved from their local Sunar Dukan, which lacked transparency, to branded showrooms of Tanishq, Malabar, etc. The introduction of hallmarking in the year 2000 fueled this trend even further, as people could trust more and invest bigger sums. The next shift happened with the change in the societal and market structure. More and more women are now going to office. People are shopping online, and Instagram is an integral part of our life. Gold is central to more personal life events too. Gifting gold is an important part in marriage rituals in Indian society. And by the way, did you know that weddings generate approximately 50 to 55% of annual gold consumption in India? On that note, let's imagine a family with women from 3 different generations. And you too may be able to relate with that comparing to families around you. We have the grandmother, the traditionalist, mother, the balancer, and daughter, the vibe curator. Let's start with grandmother, the traditionalist. The grandmother often sees jewelry as a long-term investment, often buying from a local trusted jeweler or sonar. Her collection consists of heavy, elaborate pieces meant to be stored securely in safes or bank lockers. For her, jewelry isn't about fashion, but preserving wealth and family heirlooms, which is to be passed down to future generations. Next, we come to mother, the balancer. The mother balances tradition with practicality. Her collection, mainly acquired during a wedding, is often used only in special occasions. She values the sentimental and cultural importance of her jewelry, but her approach to wearing it is more cautious and conservative. This generation, and that of grandmothers also, viewed jewelry as an important part of signaling your status and wealth to the society. Finally, we come to the daughter, the vibe curator. Today's younger woman, in her 20s or 30s, seeks versatile and affordable pieces that complement her lifestyle. She values jewelry for everyday wear, which vibes with her at work, travel, or casual outings. While she has limited wedding jewelry, she prefers lightweight designs with a focus on variety and style, driven by Instagram trends and personal expression. Jewelry is less about storing wealth or showcasing status, but is valued more for its aesthetics and style than for the carat value in their experience-driven world. Now that you can picture how our relationship with jewelry has changed, let's dive back into some numbers. The Indian jewelry market is projected to grow by $21.54 billion at a CAGR of 5.54% until 2027. Within the jewelry market, we have the costume jewelry segment. The Indian costume jewelry market was valued at $1,788.6 million in 2019 and is projected to reach $2,126.3 million by 2027, reflecting a compounded annual growth rate of 7% from 2019 to 2027, faster than the jewelry market. It all looks fine until you see the problem written in the fine print. The most surprising part about these numbers is that the demand for the yellow metal was at a 4-year low in 2023. The all-time high gold prices, driven by the weakening rupee, are showing people away from buying gold. The gold jewelry volume consumption went down by 6% from 600.6 tons in 2022 to 562.3 tons in 2023. Wondering what this numbers was 10 years back in 2014? 662.1 tons. A flat curve. See, Indians spend 25 to 30% of their total expenses on retail and shopping, which is more than anything else that they spend on. Jewelry is a part of it, and the market is growing. Let's think of gold as furniture for a moment. Earlier, almost everyone had wooden furniture exclusively. The demand grew and people needed more and more tables, chairs, cupboards, beds, sofas, etc. But wood has always been in limited supply. Hence, its prices shot up. So what did we do? Did we stop buying furniture? No. We moved to alternatives like engineered wood, fiber, tiles, concrete, etc. The furniture consumption never slowed. We just substituted wood wherever we could and moved on. Gold may be on a similar trajectory. However, the jewelry market will continue to prosper, and I can say that with some confidence. I'll explain the reasons to you. But does that mean that we are shifting away from our age-old tradition of adding to our pushtani and passing it down from generation to generation? Well, yes and no. Let's break it down. Over the past 10 years, the price of gold has increased by 142%. It was 29,600 rupees for 10 grams in 2040 and is currently around 71,500 rupees. What about silver? Silver has been more stable over the years, with its price moving from 54,000 per kg in 2013 to 75,500 in 2024. That's an increase of 40%. Not much, right? That's where the not so secret anymore trend underlies. Silver, among other affordable options, has become the new favorite for young India's jewelry needs. The silver jewelry consumption in India has grown from 601 tons in 2008 to 2,058 tons in 2017 to 2,600 tons in 2023. Whereas for gold, these numbers have remained quite flat, as the earlier data suggests. We will now shift our focus to the dazzling company, both in the market and on the ramp. PNGS Gargi Fashion Jewellery Limited. PNGS Gargi Fashion Jewellery Limited is a company that's been shining bright in the India's jewellery market. Known for its trendy yet traditional designs, they have built a solid brand. But we are not here to admire jewellery, right? We are investors. So let's find out if this stock is a hidden gem or if it's better left on the shelf. You'll be surprised to see how the stock of this brand, which specializes in 92.5% sterling silver jewelry, as well as brass and copper jewelry, gift articles, idols, etc., has rallied in the past couple of years. You would not only understand about Gargi, but also franchisee models, shop-in-shop models, and also understand how to create a space for yourself in a highly competitive sector. More on that in just a while. First, let's start with the company background. When people talk about PNGS Gargi Fashion, we often tend to only look at the fact that it was registered in 2009 and went public in 2022. But what if I tell you that PNGS, Purushottam Narayan Gadgil and Sons, has a 200-year-old business history? Let's rewind the clock. We are now in the 19th century, in a small village in Maharashtra. There was nothing much to do, with people living a simple life. But the Gadgil family was different. They had huge aspirations, and to chase them, they moved to Sangli. Narayan Rao Vasudeva Rao Gadgil continued selling their famous Gadgil Panchi towels, while his son Ganesh learned the art of jewelry trade from the Modak family. In 1832, Ganesh opened his own store, Ganesh Narayan Gadgil, which flourished over the years. Fast forward a few generations, and in 1958, Vishwanath, Lakshman and Anand Gadgil decided to expand beyond Sangli and open their first store on Lakshmi Road in Pune. Their commitment to trust, craftsmanship, transparency and service helped the business thrive. Today, PN Gadgil & Sons, formed in 2012 after a demerger, is a well-established name in the jewelry industry, carrying forward the Gadgil legacy that began in 1832. Fun fact, the family still preserves their first business ledger from that year. Now it's time to discuss the fun part of the business, the stock rally. Jewelry market in India often finds itself in deep waters, but Gargi has been a standout performer. Over the past year, Gargi's stock has skyrocketed by a staggering 315%, far outpacing the Sensex, which has grown by just 23%. This dramatic contrast not only underscores the company's remarkable growth potential, but also signals its ability to deliver exceptional returns for investors. But how did they do it? The answer lies in its business model. The company's strategy is all about staying light on its feet with an asset-light model. Now, what does that mean? Well, instead of putting money in the heavy infrastructure, they get to invest a lot more in the fun stuff, the inventory, keeping up with latest fashion trends, innovative designs, and cutting-edge tech. Like they recently introduced the Bohemian Luxe collection to catch the eyeballs of the younger audience. They work similar to a cloud kitchen model. keeping the investments low and testing out their recipes in smaller spaces before they start pumping in money on their full-fledged fancy restaurants. They have already completed 66 locations including shop-in-shop and have 5 standalone brand shops. I'll explain what shop-in-shop is in a little bit. Here's an interesting tidbit about their stores. The company has never pulled off from any of the location in the company's history and they're determined to keep that legacy going. That's some commitment. And if you're wondering how the economics of a franchisee model works for Gargi, we'll come to it shortly. Gargi doesn't believe in a one-size-fits-all approach. In their collaboration with Shoppers Stop, they have taken a different route. The company provides the manpower, but Shoppers Stop handles the day-to-day operations. If you think about it, it's a pretty clever setup, letting them focus on what they do best while still expanding their reach. This approach has really helped them reach a wider audience of women shoppers. They have also been pretty cautious with online sales. While most companies go all in on e-commerce, they prefer to take their time and not burn through cash too fast in acquiring online users. Right now, online sales make up only about 4% of their total sales, but they expect to see solid growth there this year. If you compare that with CaratLane, they get 18% of revenue through online sales. The company has to step up its online game if they need to cash in on the expanding market size of online jewelry, which is to grow at a CAGR of 19.98% between 2023 and 2028. In terms of where their stores are located, they have been largely limited to Maharashtra, where PNGS Sons has its stronghold, which is a bit concerning. But they are slowly making moves outside the state thanks to their shop-in-shop counters at Shoppers Stop, which has been getting great responses in other cities as well. In fact, Bangalore is the first city outside of Maharashtra to get a standalone store as well. Of late, they have also ventured into 14-karat gold and diamond jewelry. With the new addition, this is how they split their capital these days. 50% goes into diamond jewelry, with 60% of that for buying stones and the rest for gold. The other 50% is spread across silver, copper and brass, with silver getting the biggest chunk, 90%, while copper and brass take up the remaining 10%. There's an interesting kind of model in retail that has come up and it's called SIS model. And no, it's not related to the SIS security which you may have seen around. To understand the shop-in-shop model, think of a single shop as a big mall. Just as a mall gives out different stores to different companies, a shop can also divide its space and give it out to different companies. Shoppers Stop and Central are prime examples of it, where you find hundreds of brands within one single shop. They don't buy inventory from the brands, but they give them dedicated spaces to sell their own products. Thus, a win-win situation for both the shop and the different brands. One thing they are really careful about is who they choose as franchisees. They do their homework and make sure that they select the right partners. And if a franchisee struggles, well, they are ready to step in and take over. As for inventory, it's a mix. About 20 to 30% is made in-house, so they can keep a close eye on quality and design. The rest, about 60 to 70%, comes from international suppliers in places like China, Thailand, Bangkok and Indonesia. Oh, and here's a cool tidbit. Instead of paying influencers to promote their brand, they give them jewelry. It's a smart, cost-effective way to boost visibility without cutting into profits. Now that we know about the company and the business model, let's take a look at the finances of the company. The market cap of Gargi is at around 850 crores and it's an SME stock. If you want to buy shares of this company, you have to buy it in lots. You can't just buy a single share. You have to buy it in lots of 250 shares. In financial year of 24, the company had a fantastic year. They sold 217,000 units of silver jewelry, 63,000 units of gifting jewelry, and 4,600 units of gold jewelry. The average prices were 1,323 for silver, 1,523 for gifting, and 26,413 for gold and diamond pieces. The revenue soared to 51.1 crores, up from 29 crores last year, and their net profits nearly doubled, reaching 8.5 crores compared to 4.7 crores before. A big chunk of their revenue, about 57%, came from silver jewelry, which brought in 28.73 crores. They also launched a new line of 14-karat diamond-studded gold jewelry in October of 2023, and within just 6 months, this line made 12.15 crores, or 23% of their total revenue. The rest, 9.6 crores, came from gifting jewelry. Their stock turnover rate was pretty solid, ranging between 2.5 and 3 times overall, and for diamond jewelry specifically, it was 1.5 to 2 times. When it comes to store performance, the revenue from shop-in-shop arrangements in PNGS Gargi Sons showroom stands at an impressive 1.51 crores per store, which is much higher than the 0.04 crore per store from SIS arrangements in Shoppers Stop. The franchisee stores brought in 0.47 crores per store. Keep in mind though that the SIS model at Shoppers Stop and the franchisee models are quite new, so these numbers might not yet fully capture the potential. Let's talk about what it takes to become a franchisee for this company. To open a store, you will need an investment of 20 to 30 lakhs for the fixed structure. Then on top of that, you will need inventory. For fashion jewelry, you will need an investment of additional 12 to 15 lakhs, while gold will cost you another 15 lakhs. Now, let's get into the margins. If you're selling silver jewelry, you are in for a good deal with a 50% margin. Gifting jewelry gives you a solid 40% margin. Diamond studded pieces come in a bit lower with the 12.5% margin. And surprisingly, there's no margin on gold jewelry at all. It's set at 0%. They have bumped up the commissions for the franchisees and have also given them the freedom to offer discounts whenever they see fit. It's all part of their plan to help the franchisees grow and run their businesses smoothly. And when those discounts are applied, well, the cost is split right in the middle, 50-50 between the company and the franchisees. The company has really improved its game by expanding its retail presence across major cities like Hyderabad, Bengaluru, Kolkata, Nasik, Mumbai, Pune, Chennai, Shillong and Kanpur. They have opened several points of sale and exclusive brand store franchisees in these key locations. As of financial year 24, they are currently running 30 shop-in-shop setups with PN Gargi Sons, 20 SIS locations with Shoppers Stop, and 5 exclusive brand stores of their own. Pretty impressive, right? Now let's dive a little deeper into the balance sheet of the company and check out the profit and loss highlights. The company had an impressive year in 23-24 with total income reaching 51 crores, a significant 77.26% jump from 29 crores in the previous year. Most of this came from revenue operations, which saw a 76.06% increase, moving from 29 crores to 50 crores. The company has been maintaining an effective average operating margins of 27.16% in the last 5 years. It's much higher than the industry average of 8%. It shows the conservative approach of the company so far, which can translate into bigger things if and when Gargi decides to press the pedal. Meanwhile, finance costs remain relatively steady, coming in at 13.54 lakhs compared to 13.86 lakhs the year before. Other income saw a notable increase too, jumping from 15.38 lakhs in 22-23 to 61.63 lakhs this year. What about the bottom line? Net profit surged to 8.45 crores, up from 4.68 crores last year, showing strong growth. Why don't we quickly take a look at how they did in the first quarter of FY 2025. The most impressive highlight is the massive jump in sales from 15 crores to 44 crores, with expenses remaining almost constant. But I'm afraid this is not because of some awesome sales performance. As I mentioned earlier, the company has shifted from a franchisee-owned company-operated model to franchisee-owned franchisee-operated. So, on 1st of April 2024, they sold all the inventory lying at the franchisee's location to them and issued an invoice for the same, thus resulting in a massive spike in revenue. The company's net worth also took a big leap, growing from 20.58 crores in March 23 to 29 crores by March 24. This includes a paid-up equity share capital of 9.62 crores and other equity amounting to 19.41 crores. On the borrowing front, the company had an overdraft facility of 1.73 crores from the previous year. Total assets also surged, increasing by 14.42 crores, bringing the total to 38.63 crores from 24.21 crores last year. Inventory levels also saw a major rise, jumping from 10.45 crores in FY 22-23 to 32.1 crores in FY 23-24. The timing of this couldn't have been better for Gargi, as there was a steep rise in gold prices in early quarter 1 of FY 24. Gargi is in a solid financial position with short-term assets totaling 36.8 crore rupees, which comfortably surpasses both its short-term liabilities of 8.7 crore rupees and its long-term liabilities of 90 lakhs. This means they are not just covering their short-term obligations, but also handling their long-term commitments with ease. Before I wrap up the numbers for Gargi, I'd like to talk a little about the cash flow. It went from positive 11 crores in 2023 to negative 11 crores in 2024. Quite the seesaw, as you can see. The reason behind it is that they brought in inventory of 21.66 crores in 2024, which is a massive jump from 3.63 crores in 2023. The promoters continue to hold a large share of the pie, with 72% of the shares belonging to them, which is always a healthy sign. But it may be a little too early to say if they'll be able to maintain it. It's time to see who are they up against, their competitors. And perhaps, compared to the jewellery space, the only other thing that can have more competition is the UPSC exams in India. Firstly, unorganized sector. With such positive sentiments about made in India products, I tell you, the market is buzzing with local artisans and small shops. These are everywhere, offering a huge variety of jewellery at competitive prices and often customizing to local tastes and preferences. Then, we have the organized sector. Gargi is competing with the big guns like Mia by Tanishq, Jiva, Kushal's Fashion Jewellery, Voila and Swarovski. These brands have a structured approach, quality certifications backing their products, and are far more popular. Lastly, we have e-commerce platforms. Online marketplaces like Amazon, Flipkart and Myntra also add to the competition. Because why not? They have a vast selection of jewellery from both unorganized and organized sources, often at attractive prices. Each of these brands cater to different customer preferences, making the competitive landscape pretty diverse for Gargi. Another thing to note here is that company has no plans to introduce lab-grown diamonds, which a lot of big players like Jiva and Carat Lane have entered. The focus for them remains on natural diamonds to maintain brand integrity and customer trust. Lab-grown diamonds are approximately 70 to 90% cheaper than natural diamonds, making them accessible to a broader audience. In India, where only 5 to 8% of the population can afford natural diamonds, lab-grown diamonds democratize access to diamond jewelry. We'll get to know in due time if it's a good idea or if it will backfire. Before we wrap it all up, I would like to put everything in a nutshell. Gargi Fashion is a new age company with its focus on more offbeat jewelry segment. Though small in size, it's built on strong business fundamentals. Or else, why would they cap their marketing budget at only 1.5% of its turnover, with some other new age brands are spending around 15 to 20%? The answer is profit. And historically, any company which focuses on profitability does provide good results to its investors, even if they take more time. Not being present pan-India can be a concern, but again, it's a new company and they have solid plans of increasing their presence. As we discussed earlier, the jewelry sector in India is seeing a shift, and the brands which can ride these new waves would emerge as the winner. Will Gargi be one of them, or are there other jewelry companies which will steal the show? So Provestors, why don't you let us know your thoughts in the comment section?